let's dive. I've prepared a few questions that I'm particularly curious about, and of course I can't wait to ask you guys about. Can you hear me well? Yes. Huh? Ask you guys about a few points. So one thing I always think about when it's one of the most important features of blockchain technology is that all transactions are recorded on an immutable ledger. Most status changes and everything can be recorded there. So that provides an insurance product that is based on the blockchain with essentially a perfect audit trail, if you want. And my thinking is always that I feel this would be extremely valuable and useful for regulators as an audit trail that they can also use. And in principle, the fact that this technology is used should be making the supervisory processes for regulators much more efficient and much more effective. But it seems they are not really using this, and I always wonder why are they not jumping on this possibility or on the technical possibilities? Do you have any thoughts on this, Timo?
Well, actually, first of all, I would say I agree. Yeah, in the perfect world, the DLT solutions is actually the perfect world for regulators because it's traceable. You can verify it, and it's immutable, etc., etc. And I think we will get there, but it will take some time because, as Yulu said, the first thing the regulator sees is a risk, yeah. And also a couple of speeches earlier today, we have learned that the entire crypto space needs to get a little bit more bored, yeah. And as long as we have these hiccups like scams and these are quite prominent in the media, I think the regulator, who is not really in all the details, yeah, all these people here, they know what we are talking about. However, the regulators, they are many old people, many people who have a lot to do besides of taking care of innovative business, and they're not getting paid for doing extra work, yeah? So it takes just a long time to get familiar with innovative systems. So I think that's the main issue. It will take more time for them to understand the benefits of the system.
What do you think, Huilin?
Yeah, I mean, firstly, I can only support what you say about how it will take regulators time. But I would say that maybe there is a little bit of silver lining in the sense that regulators are, at a global level, starting to discuss this idea of a supervisory node. So the idea that, you can plug something into the blockchain and, do a little bit of like real-time supervision. So I think on a very broad level, regulators are sort of excited by this idea. But as you say, I mean, the first thing they think about is, what are the risks of this? What are the legal risks, any data risks? How do we plug in the system in a way that preserves the confidentiality of so-and-so? And, how will it affect market dynamics? So, these are the kinds of things that come immediately to a regulator's head. And I feel that maybe the best way forward is, I feel like, there are some days where I wish, putting myself on the other side's shoes, we could just sort of walk up the regulator's door and just knock on it and say, look, this is how it works. We've done it all already. Click on this, click on that, click on this. Look, this is all you need to do. It's fine. So, maybe something as concrete as that, I feel, is the ideal way to convince a regulator who is risk-averse.
Yeah. Probably just one thing to add. Why is this so ideal, especially for the insurance sector? If you talk to the regulator and see all these reporting requirements, which are massive, especially in the insurance sector, most of the reportings the insurance companies have to do every day or on a periodic basis, the insurance regulators cannot even cope controlling all these data. So most of the data are somewhere, but no one is really controlling it, yeah? Just when something happens or they have a certain interest in doing an analysis, they actually look in all the files. So it is a massive really benefit for all this, let's say, reporting requirements and the monitoring and compliance about it to have, let's say, a self fulfilling system here.
Yeah. Can I just maybe add one last thing to that? So I think a lot of regulators are trying to invest more and more in regulatory and supervisory technology. But I think maybe the issue there is that you really only have 1 or 2 companies who are dominating the market, providing the sort of data reporting technology. And in that sense, maybe they haven't seen the benefits of blockchain yet because there is another technology there that is already available, and they're really, really selling this to regulators as well.
Oh.
Yeah.
Huilin, you were speaking a little bit about sort of the reasons why regulation exists and what they're trying to protect, which is, of course, the consumer's interest and the insurance market in general. And I'm going to get to that point of if whether or not insurance or someone who offers something similar to insurance is posing a significant risk. So if you look at, let's say, digital insurance policies that run as insurance smart contracts on the blockchain, in principle, they're self-executing code, and they're equipped with a sort of technical certainty where it's essentially impossible that if an insurance payment is due, according to the terms of the insurance smart contract, it will be paid. It's technically impossible. So they might not be backed by an insurance company which complies with all the legal requirements of the regulation, but the technical certainty makes it essentially, or provides a similar protection to the consumer and the insurance market as a whole. So that's another time the question where I don't understand why insurance regulators don't seem to recognize the power of this element. And do you maybe think that at some point they'll come around to think, actually, blockchain-based insurance product offerings of sorts are not posing a significant risk because of this technical certainty? Do you think this is going to happen at some point, or?
I mean, I think that's a really interesting question, because is it really the certainty of the money being paid out, like, or the will or intention for the money to be paid out, that is the concern of the regulator? I mean, of course, some regulators worry about insurance companies who have bad governance and who might not pay out even when they're promised to the consumer. But a large part of the regulator's concern is also sort of the financials behind it, you know, how it's structured, how many layers of capital, and how secure they are. So to me, that's maybe the part that worries regulators a bit more. And if there's a way we can, you know, decode some of the terminology that we've seen in the conference today and try to explain the financials to regulators a bit more clearly, I feel that that's a step towards that. I mean, of course, the other side is that then regulators also need to understand quite concretely what does, you know, immutable and these concepts mean. I think I like some of the discussions today where you talked about, you know, the probabilities of something being hacked and things like that. I think these are the kinds of details that are probably important to be illustrated to the regulator. I mean, it is probably going to be a slow journey. I'm not going to lie. I mean, even with mobile insurance, it took years for it to grow. But I think the best place to start is by providing sort of more relatable information.
Yeah, I mean, especially, we talked about risk pools today quite often, and I mean, in principle, you could program a risk pool in such a way, or the smart contracts maintaining the risk pool, you could program it in such a way that they simply, no more policies get issued if there's no capital to cover it anymore, which I guess would solve a lot of the solvency requirements that the regulator normally has to check.
Yeah, I was just going to jump on this point. I think that's the main problem insurers have today. So if we can solve this, like with the smart contract protocol, it would be a major step forward. Yeah, and it is also not about just the existence of a sufficient risk pool, but also about adjusting the existing contracts. Yeah? If you have, let's say, 20 years ago, 30 years ago, you've made a capital life insurance contract, yeah, you may be fine off, but if you do it today, you don't get any good contracts anymore. Yeah? So there's no real adjustment policy in it, and as the solutions we've seen today, they totally work differently. Yeah? It's more, let's say, a community approach, and that would be actually helpful for everybody.
All right. So I guess until regulators start sort of understanding the potential that new technologies, especially blockchain technology, delivers, all the sort of companies and projects operating in the decentralized insurance space are forced to make a fairly difficult choice. It's either in or out, meaning either you do work in the regulated framework, which means you need to get regulated yourself, or you need to find a partner with someone who has a regulatory license, or you need to decide you're going to be out of regulation, which means you're going to find some legal model where what you're offering is just short of insurance. And I'm sure some projects have an even bolder approach, and they just say, well, we're going to operate outside of the regulation and hope for the best. But how do you see that? Where's the trend going? And have you seen any interesting legal models and developments that make the choice a little bit easier for the companies operating in the space?
I think it's really depending on in which gray area you are, how black or white you are. So if you want to address the European or German market directly, most companies we see, they mingle or work together with some kind of insurer. However, if you've got a product where you are to a certain extent confident that you are fine working without an insurance company, you can do it, and people do it, also with the hub in Europe. Everything which is in between, especially in the DeFi sector, we see a lot of companies trying to avoid being domiciled in the heavy regulated markets like Germany, for example. And this perfectly works out, at least for the moment, if you do not address residents in the European market. Yeah, we've seen, for example, it's not an example of insurance business, but of DeFi in general, like Cake DeFi. They had a German website and German contacts, so they get a notice by BaFin, a public notice, and they just extinguished everything which is German on their website, and they continue what they did before. They now still decide to apply for a license, and that is what we have seen for many market participants. They start actually without a license, maybe offshore, and the deeper they get into the European market, the more consumers are onboarded on their systems. They think about, okay, probably we need some local support, we need marketing, and then they start to work together with the regulated player. So it's an evolution, I would say, yeah? If you are a startup, if you are young, you may have the choice to start outside the European market or German market. The more successful you get, you think probably about working with a regulated player, if needed, of course.
Yeah, I think we spoke about something which I'm almost sure you're going to mention now before the conference. There is I think what Timo is describing is a little bit similar to what you described as a concept too good to fail.
Yeah.
Do you think that this is a model that some projects will be adopting, and will they get away with it?
Yeah, so firstly, to add on to your points, I think a lot of companies, I agree, try to do that also in the inclusive insurance world, like to try and start something small and then sort of try to avoid regulations if possible. But I mean, what you're saying now, like choosing domicile wisely, I think with inclusive insurance, that's maybe a little bit more difficult, right? Because you're really dealing with local stakeholders. You're dealing with people who expect to buy from companies that are local, and they're not really going to buy into the idea of, buying online from a global player that's not necessarily, licensed in their country. So I think that's the part that's difficult. And so I guess then the question is, is there a way that you can have as light touch regulation as possible while you're trying to achieve proof of concept and rollout, but at the same time, not basically get in trouble with the regulator later on when you've grown? Because, I mean, with low-income markets, especially emerging markets, regulators are very sensitive to the needs of these segments, right? And they are not going to be very happy if for any reason they think that there's been a company that's, sort of interacting with around insurance with low-income segments and something went wrong. They're not going to be very happy about that. So ideally, if there's a way you could become too good to fail, like through your proof of concept, you show that you are able to grow responsibly, you are able to anticipate the technical risks that come with the blockchain platform, and you have experience in fixing them, and basically regulators think that way. What are the risks, and how would you address those risks? So if you can sort of show, firstly, okay, look, clearly we are benefiting farmers through our program. This is the claims that we paid out. These were the losses we made. We paid out at this point in the season when they needed it most. And this is how we've been dealing with bugs. This is what happened. Something went wrong. We fixed it. Maybe there's a chance, in that sense, that regulators will see that, okay, this is not something that this is something that I can't help but want to support. That's what I meant by too good to fail. And I don't know whether it's possible to achieve something like that.
Timo, you mentioned a little bit the European market and the German market, but how do you think the EU's MiCA regulation is going to affect decentralized insurance, if at all?
Yeah, I think there's an effect. I mean, we see two very interesting developments in the MiCA. For everybody who's not aware of it, the MiCA regulation is the European regulation. It's not finalized yet, but we have the latest draft for March for any crypto assets, issuance or trading or whatsoever in Europe. And there's just in the latest draft, two very interesting things came up, which may be also a blueprint for the insurance market. One is quite negative if you are outside of the European Union. As I just said, and that is the concept in all the banking or financial insurance laws so far, if you are outside the Europe and you do not address European residents, you can do what you want, to a certain extent. So it's the so-called passive freedom to provide services, It's actually in the OECD code for the correspondence insurance. If the residents on their own initiative choose to have insurance in the US or somewhere else, it's okay. You do not need to be regulated within the European Union. However, now in the MiCA, there's a new concept. I'm not sure if it's really going through, but it has just been put in, that if you have within your client base European residents, you need to have a company within the European Union and being regulated. So irrespective of addressing Europeans, that's a total change of regulation. So why is this? Because in the past, many regulators say, okay, if you do not address the German market, we don't care, because the people here, they cannot, let's say, trust in engaging with a regulated entity if they, let's say, look on their own. However, the times have totally changed. There are people look on Twitter, Discord, or whatever. What's the best solution for their problem? So this doesn't really work anymore. So maybe we see the same thing in the insurance market, but I would expect it to come a little bit later. The other, let's say, more positive thing is we see in the MiCA also the approach that if you are a DAO or a decentralized system, you may not need to be regulated. If you're not controlled by anybody else and your systems run automatically, so you really have no a controlling body, you do not need a regulation. And that's also totally new in the regulatory space. So that might be, especially for peer-to-peer insurance, a very good approach if this will develop also in the insurance sector.
Yeah, that is very interesting. I'm mindful of the time, and I think people also have been promised a little networking drink session. So this is my last question now. Mainly for Huilin, I think, but of course you're welcome to answer too. According to Article 8 of the Paris Climate Accord, it says that the subscribing parties should enhance understanding, action and support with respect to loss and damage associated with the adverse effects of climate change. according to Section 4, letter F, areas of cooperation may include risk insurance facilities, climate risk pooling, and other insurance solutions. Do you think that this will, or that this clause can be used to open the door to lighter touch regulation or to accelerate regulatory processes and programs like sandboxes, which are making it possible for technology providers or for people in the decentralized insurance space to deliver solutions? Because I always think, okay, well, you know, the people in the decentralized insurance space, in theory, like we and the Lemonade Climate Coalition, very soon, we will be able to deliver solutions to farmers who desperately need them. A lot of people are looking for those markets as an area where they can scale. Well, what do we tell these farmers that why the solutions that are theoretically there and that could be delivered to them, they're not getting to them because of regulation, which is ironically supposed to protect the farmers. So I was looking at this Article 8 of the Paris Climate Accord, and I thought maybe this is something that can open the door to lighter touch, or to incentivize regulators for lighter touch regulation, or develop programs at least. What do you think?
Yeah, so I think the interesting question that this brings up is, who really is the regulator stakeholder, right? I mean, of course, you have the consumers, but a lot of time, regulators also really respond to what sort of the government strategy is. So if the question is, okay, will these generally international agreements, let's say, right, international commerce agreements as a concept, will that give sort of enough push at the government level to then incentivize regulators to, accelerate certain things like decentralized insurance, as if they know that it supports climate goals? I would say there is definitely hope there, because a lot of times where we see regulators take a very active role in climate, it's really been pushed by these sort of international conversations coming to the governments, coming to regulators, and it's really accelerated a lot of work in the climate space. So I would say yes, that there is hope, I think, and I think it will be really nice if when we approach countries, we can sort of like pull the ministry into the room and pull the regulator in the room and go, okay, guys, look at this. We have a common mission here. Can we try and achieve this together, right? That would be great. I wish we could all do that. Yeah.
Yeah. Just one small point to add. I think also yes. Why? If you see the entire ESG space, when this regulation came up, most of the people who are working in the field of financial or insurance sector thought, okay, most of it's optional. You just have to explain what you do. Yeah. So we said, okay, some company may do it, some don't, but the total difference came actually. Everybody is so keen on being super over-obligatory on this. So everybody wants to have a good stamp on the ESG. They all want ESG compliant products, and it's really a change of mind in the industry. That's what we notice, and we got a lot of questions by the regulator, by product initiators, by investors. So I think there's a really good chance this time that we also get a better regulation to enhance these fields.
Yeah, hopefully we'll see some more interesting news in that space. Then let's close with this hopeful message.